Good afternoon, everyone. My name is Joonas Joost, and I'd like to welcome you all to Tallink Grupp's third quarter results webinar. Today, together here with me are the chairman of the management board, Mr. Paavo Nõgene, and member of the management board, Mr. Harri Hanschmidt. We will first give an overview of the quarterly results, and after the presentation, we will address the questions. It is possible to ask questions also during the webinar by writing in the right-hand box, but we'll start answering the questions from the ones which we received prior to the webinar. Right now, give the word over to Paavo and Harri.
Good afternoon, my name is Paavo Nõgene. Thank you for joining our webinar today. I just give a short overview introduction before Harri will continue with the quarter three overview. We had a very busy quarter. We started the quarter with hope, beginning of July, that the world is getting back more normal, because we saw some positive predictions during the June. We also, end of the June, opened the Helsinki-Riga route and so on. During the July, we were quite happy about the example, the Tallinn-Helsinki route recovering. It recovered almost on the shuttle to 70% from previous 2019 July. But sadly, as we all know, beginning of August, everything turned again more negative, and we started to close down again some departures, rerouted some vessels. And during this whole quarter three, we worked hard to save the costs, not only during this third quarter, but for long term. We started different redundancy processes, example in Sweden, beginning of July, and worked with unions in all our countries to find a common understanding about the possible future of the Tallink Grupp in all our different countries. We can say right now that we are stronger than we were beginning of quarter three, because we have made different changes in our company, but we will see the financial impact from these changes from January, February 2021, because different processes, redundancy processes in different countries, taking their time, and as the regulations in countries are very different, we strictly follow the different regulations to make everything correct way, that do not have any negative impact in the future from these things we have done now and will work with quarter four as well. But happily we'll answer questions later on after the Harri have given overview about the numbers Q3 firstly. Thank you.
Thank you, Paavo. Good afternoon from my side. My name is Harri Hanschmidt. I'm board member for Tallink Grupp. I will give you a brief overview of the events in the third quarter, and Joonas will continue later with the segments and other information. So first on the slide 3, on a regular year, we are the leading European provider of leisure and business travel and sea transportation services in the Baltic Sea region, but this indeed is not quite a regular year. So we own and operate a fleet of 15 vessels, and to the COVID pandemic and the travel restrictions, unfortunately 5 of these vessels are suspended, so out of daily operations, and one vessel is docked. for maintenance works. Out of the vessels that are suspended, for example, Silja Europa is doing a new product for us, the floating shopping center, and Silja Symphony, for example, will be back in December for some special cruises to Visby. We also we operate the 7 ferry routes. Currently, 3 of these are also suspended for daily operations: Tallinn-Stockholm, Riga-Stockholm, and Helsinki-Stockholm. Although we have some travel products available between Tallinn-Stockholm and Riga-Stockholm, the ship Victoria is doing cargo and commuting and travel operations there. We also operate 4 hotels, out of which 2 are closed until 2021 high season. City Hotel is going through major renovation and will be opened in the early in the high season. And Riga Hotel is right now closed down due to not enough traffic and tourism because of the COVID crisis. On a normal year in 2019, our revenues were 949 million euros with 1.8 billion passengers served and 300,000 cargo units, and with a 1.5 billion asset base. This is mainly the vessels. Currently, in end of Q3, we can see that our employee number is 5,726 employees. This is 20% down from the past year's Q3, and then effectively, if you look at the full-time employee or workload, it's down by about 40%. Because we don't only do right now redundancies, we also have layoffs in Finland and Sweden, and also have workload reduction on various positions to weather this crisis as well as possible. Our Club and loyalty program consists of 2.7 million loyal members. The highlights for the 2020 Q3 are obviously the extensive impact of COVID-19 and the restrictions, travel restrictions, also willingness to travel less because of different uncertainties. Shareholders agreed on the 2019 annual general meeting not to pay out dividends. We are employing currently assets flexibly. Many of the regular routes are out of the operation, but the ships will do work as and when they can. Here it's good to mention, I think, though, that the regular operations are always more profitable, and these initiatives are very good, but are not long-term substitute. We have activities toward long-term sustainability. We engage in cost cutting and have initiated extensive reorganization to align the cost base with the recovery cycle of the travel industry. We have sought liquidity and have increased the liquidity buffer by adding 20 million overdraft in the third quarter, and we also added in the second quarter 40 million to the overdraft. We have thrown out the first of the Credex 100 million loan, and the first 40 million of it is now thrown out for working capital reasons. We opened the first Burger King outside of Tallinn in Tartu. It got a very warm welcome and it is operating right now in Tartu. In the third quarter, we also paid out 73 million for the MyStar, and now we have 37 million for MyStar, and we have one payment now left in Q4. And as mentioned before, full-scale renovation of Tallink City Hotel has commenced. On page 5, we can see the impact on the transported passengers, and it's about 50% down overall. We can see in Q3 we saw passenger demand, but because of reduced capacity and travel restrictions, obviously the passenger numbers were much lower, and we right now don't also benefit from different holiday travels that much. For example, Easter was the lockdown period, and right now school holidays are also, people are not able to travel as much. But we do see interest in shopping, and obviously work trips and commuting, cargo transportation continues between the countries here. Well, our seasonality breakdown, typically summer is the strongest season, and we can see that the passenger numbers obviously have gone down quite a bit from 3 million to 1.3. Cargo units transported are more or less on the previous year level. Revenues down 228 million to 144 million, and EBITDA slightly positive with 6 million compared to 83 million in third quarter this year. Page 7, we can see the effect of the COVID-19 and travel restrictions. The number of passengers went down by 55.8%, and this is the result of the COVID-19 and this related travel restrictions. More limited impact on cargo operations. We had 7% less departures compared to Q3 2019. The dynamic here is that we actually had 20% less cruise or long route departures, and we added even additional vessel for the short departures. The vessel Victoria helped out Megastar and Star in transporting cargo and commuters, so that there would be a safe environment to travel and enough room for the passengers on board. We are engaged in strong cost reduction and are seeking support when possible. Cost of sales reduced by 27% or 54 million. Marketing and administrative costs reduced by 24% or euro 7 million. And we received direct financial support of 3.8 million euros in the third quarter of 2020. The support received in Q2 was much higher. The capital expenditure is mostly related to the MyStar down payment. And on page 8, we can see the seasonality. Regular seasonality is that in the first quarter we earn a negative profit, second and third quarter are the most profitable, and fourth quarter somewhat profitable. This year we can see that we do not earn profit, and all the quarters have a negative result. Hopefully next year will be better. I think everyone in the world looks for a more normal year. So this is about it. I think I will maybe mention that we are seeking to ensure a safe travel environment and experience for the passengers, and we are able to provide this. I will give now word to Joonas Joost, who will continue with the presentation. Thank you very much.
Thank you, Harri. Perhaps we'll look slightly more in more detail into the results in Q3. So looking at the development of the revenues by the operating segments, then as explained earlier, the COVID situation and various travel restrictions combined for the lower volume in passengers, which have significantly affected our operations, which is also very much seen in the restaurant and shop sales, and also in the ticket sales, which were the two biggest operating segments in terms of year-over-year decline in revenues. We did have also some decrease in the cargo revenues, but as can be seen on this graph, to a much less extent compared to the passenger operations. When looking at the accommodation sales, then this part of our operations was as well impacted by the COVID situation and in general lower number of passengers. But I would also highlight here that during this quarter we operated one less hotel compared to last year, as the Tallink City Hotel in Tallinn was closed down. The only segment where we saw a positive development compared to last year was the chartering of the vessels, where the change in the charter agreement came to effect in the fourth quarter of 2019. When looking in terms of the geographical segments, then all the routes have been affected significantly, with the Finland-Sweden route seeing the largest negative development. And it is important to realize here that the routes are not fully comparable to the operations that they were a year ago, arising from the fact that as explained earlier, we used the vessels flexibly on other and new operations. So when we're looking at, for example, Estonia-Finland route, then this year's operations include also the operations of Victoria 1 on the route, as well as operations of Tallinn-Turku and Tallinn-Mariehamn routes, which were not there last year and which have not been there normally. Estonia-Sweden reflects mainly the Paldiski-Kapellskär cargo operations, and it does not include the Tallinn, effectively does not include the Tallinn-Stockholm business, which was there last summer. Between Latvia-Sweden, there were no daily operations, and there were some limited operations in terms of Riga-Stockholm route, and also special cruises from Riga to Helsinki and Mariehamn performed by the vessel Romantica. And on the Finland-Sweden route, the Helsinki-Riga operations of Silja Serenade, as well as symphony operations from Stockholm to Visby and Härnösand, are included in the segment results. And these are the new routes which were not there last year. As explained earlier, the revenues overall declined quite a lot, by half. And unfortunately, we were not able to reduce all the costs in the same pace. So we managed only slightly positive EBITDA of 6 million euros in this third quarter. And it's also important to highlight here that during the quarter we received 3.8 million direct financial support, which reflects here on the other operating items line. But if you remember from Q2, then during that period we received 16 million euros direct financial support, and also salary support measures were in effect during the quarter. Therefore, the EBITDA of Q3 is largely from purely our own operations and without much financial support. And due to relatively high depreciation costs, the net result was negative 24 million this quarter. There aren't that many changes in the cash flows, as the operating result was neutral this quarter. The capital expenditure of 41 million euros reflects mostly the installments paid for the new vessel MyStar, and looking a bit down, few lines below, the debt financing reflects largely the 40 million addition of Credex loan, 40 million euros, and some increase in the used overdraft facilities. Overall, due to the external financing, the change in cash was positive this quarter. And the financial position at the end of September, the changes reflect largely some increase in the assets, which are related to the addition of MyStar in the financial position. And also you can see the increased level of interest-bearing liabilities reflecting the increased loans. And obviously, as the business environment has been really deteriorated, the ratios, particularly the net debt EBITDA ratio, is looking not too normal at nearly 16 times. At the same time, if you look at the equity asset ratio, then this ratio has remained on a more reasonable level. And continuing with the debt structure, it's perhaps to highlight the changes from last quarter is that with us now drawing the first tranche of the Credex loan, we have 6 loan agreements outstanding with the total interest-bearing liability from long-term bank loans amounting to 517 million. In addition, I'd highlight that we have at the end of September, we had 51 million euros as used overdraft and an additional 84 million euros still unused overdraft. And lastly, I'd also highlight that although we drew the 40 million tranche of Credex loan, still 60 million euros are undrawn of the total amount. And what has happened after the end of the quarter, so basically in October, and after that, we still have the very last installment, 12.4 million euros for MyStar to be paid this quarter. As discussed earlier, we are carrying out the collective redundancy processes which were initiated, and also the group's Finnish and Swedish subsidiaries initiated negotiations with the employee union representatives. The hotel in Riga was closed in October, and we look to open the first Burger King restaurants in Latvia and Lithuania also in the fourth quarter. And in terms of perhaps current and even slightly more longer term outlook, it is largely uncertain and mostly dependent on external factors such as the situation with the COVID virus, states' decisions regarding the timing of the lifting of the travel restrictions or imposing travel restrictions, and such other similar developments. So this overview concludes our introduction of the third quarter results, and we would now proceed to the questions. And we would start with the questions that we received in writing prior to the webinar. The first question goes: how does the company plan to survive the next 4 to 5 months? Where does the money come from?
Yes, thank you for the question. We have, first of all, we have made a very tough cost-saving control in-house the company. We have secured our liquidity quite significantly. At the end of September, our liquidity position, as Joonas also mentioned, was 115 million euros, and on top of that we still have 60 million euros on Credex's working capital loan to draw. Yes, from this all we need to make the last payment of the MyStar, as Joonas mentioned, but as we have seen beginning of fourth quarter, we have been successful with our cost savings so far. So yes, EBITDA is a bit negative, but we don't see right now any significant liquidity problems in the near coming months, because still Tallinn-Helsinki route is operating, also Turku-Stockholm for commuter traffic and cargo services. Plus, still we see some onboard income from these routes as well, from the people who are traveling or need to travel because of the work.
Yes, and I would add that just to highlight that we have the grace period for the principal payments of the loans agreed with our financing banks earlier this year, which lasts until the end of this year, and we will definitely keep close eye on the development on the market and our operations, and are also ready on our side to explore similar options for the future if there should be any need for such negotiations. The next question: did the increase of cargo prices affect the volumes and segment income?
Need to clarify that we didn't increase the cargo prices during the Q3, so we are going to comment it in Q4 report.
Okay, thank you. How and at what terms is the renovation of Tallink City Hotel financed? Seem to have some technical problems with the microphone.
Yeah. Our investment is for fixture and furniture, but majority of the total investment burden will fall on the owners. That is what concerns investment into the building, as well as actually a substantial portion of for the fixture and furniture as well. So we going to continue our operations under the rented facility basis.
Thank you. What costs do not allow for the company to earn gross profits? Are those discounts on the goods, personnel expenses, or something else?
Actually, our EBITDA in the Q3 were positive. So if the aim was to ask about the net profit, then it was depreciation and amortization cost. But of course, if you're going talk about the EBITDA, why in some months in the beginning of year and most probably end of the year EBITDA is negative, it is due the ongoing redundancy processes where the personnel expenses are higher, but also impact is because we don't have enough passengers on board, and who knows very well our business structure, then more than half of incomes coming normally from the onboard services. So this having the impact. We haven't done any big discounts of the goods, and so this impact from this is not significant.
Thank you. Next question. Cash flow wise, how successful have the so-called floating mall events been?
It's not the big business for us, but it has enabled us to offer some value for customers, have some outlet for our staff, but also allowed us to reduce inventory at reasonable terms. Overall, the financial impact is positive when compared to simply having the ship standing in the port. And as we have still 2 months to go until the redundancy process in Estonia fully end, then we have also employees who we can use on our vessels for such kind of activities right now.
Thank you. A question about the Burger King restaurants. How is the Burger King performing?
Yes, I will maybe take this question. We're quite happy with the revenues, but maybe it's good to remember that this is the first year we started the Burger King chain, and also there was a slight delay because of the lockdown period. Most of the Burger King restaurants are in shopping centers, so we are a little bit reliable of how the shopping centers are open and how many people are there, but the top line is looking pretty good. But we also have the opening costs, some development costs, and each restaurant is training employees for the new restaurants. So next year we will see positive numbers.
Thank you. About the costs, is there any way to get some kind of cost guidance for coming quarters?
Yes, thank you. We are not generally giving any specific financial guidance, but there are a lot of variable expenses. So a lot depends on the extent of our operations. For example, how many ships are operating and under what schedule. Also, how much sales we have in our shops and restaurants. What we can say is that we have made efforts to reduce the cost base for the coming period and look to spend in general less money on all activities. The largest component are the personnel expenses, and we expect to see impact of reduced costs coming in the last quarter of this year and from the redundancy process we made in Sweden from the second part of first quarter next year. This year has been exceptional in terms of having reduced operations, but also salary support measures mainly in quarter two. So that has distorted the result quite a bit, and it's difficult to refer to you any good comparison period right now.
Thank you. The next question is, can you please quantify the expected cost savings from redundancies made so far, 900 employees? Will the full effect already be seen in Q4 or only Q1? But I think this is something that we just largely addressed in the previous question. So the next question is, can you please quantify the expected cost savings from the new possible redundancies of 1,500? When will the effect be seen?
Actually, it's the same. We will 1,500 is mostly the redundancy process we have done in Estonia during all this year, and we see full impact from it beginning of next year.
Why are you not specifying your 2020 results guidance at this point? Assuming passenger numbers will remain broadly on October levels, what would be the cost base in Q4?
We are, as we said, that we are not giving out the guidances, and so we continue this right now.
Thank you. What is your total liquidity buffer? Is it 115 million plus the undrawn part of the working capital loan of 60 million euros?
As I answered that, our liquidity buffer was 115 plus 60 million, which is not drawn from the credits yet. So this is with what we're working right now.
Thank you. How much of the long-term bank loans falls due in 2021?
We can't say it right now exactly because it's depending of the ongoing negotiations with banks, and we are ready to comment it in Q1 2021 reports.
Thank you. So the next question, one moment. How many employees have you let go during this year, amount and percentage-wise? Do you need to let more people go?
I can answer this way that when we started the year, we had average 7,000 plus employees. We will end this year with around 2,500 employees average less.
Thank you. How the full year looks like, how big the loss would be?
We're working with the aim to have as small loss as possible during this COVID-19 period, but for sure we have reported our Q3 where you see our 9 months result, and we don't see any positive signs for the Q4, and it depends when vaccine or medicine for COVID-19 is in place, and in our Baltic Sea region people can have it.
Thank you. 3.8 million financial aid was from the government. Do you need more financial aid from the government during this year?
This 3.8 million euros were mostly the salary compensation mechanism in Sweden, which was in place for all different companies in Sweden. There are still ongoing process for all the shipping companies who are operating from the port of Tallinn. As we have explained earlier, in April, the Parliament of Estonia agreed to have the support measure in full amount 20 million euros, which will be divided most probably between 4 different operators who are operating Ro-Pax vessels from port of Tallinn. So we will apply it, and most probably will get some from that. But the question, do we need more financial aid from the governments during this year? As long we have information, there are no extra measures coming up during this year in our countries where we operate, but we know that in Sweden there are negotiations regarding the next year possible support measures for all the companies who are registered in the Sweden, and of course we having our eyes on all countries where their COVID situation is very bad, as we can see right now. So if they're coming up some measures for the companies where we can apply, we definitely will apply.
Thank you. In the view of the management board, what is the worst case scenario that you are expecting or planning for, assuming there is no recovery in the travel industry?
No, first of all, there will be the recovery for the travel industry and the tourism industry as well. It's just a question, and a big question when, because this depends, of course, as I said, will there be vaccine or the medicine available in near future, or it takes longer time, and what are the restrictions between the countries if there are no vaccine or medicine coming up in the near future. So we are not going to speculate what are the worst scenarios or not, but all the world right now depends from the scientists' works. Do they find a good vaccine or medicine for this virus, which have caused chaos in all over the world, and especially in the transport and tourism sector.
Thank you. What sort of cost savings will you realize in 2021 when your fixed fuel price contracts run out?
We don't have a crystal ball to say what will be the fuel price beginning of next year or second quarter or second part of year. So we are in the negotiations with our suppliers, and we haven't agreed yet terms for 2021.
I would maybe just add or guide you to our interim report in the section of economic environment. We've described that overall the global fuel prices on average declined by 40% during the period, and our fuel costs declined by 36% in the same period compared to last year. And I'd also remind that there is some also change in underlying consumption of fuel, as we've had 7% less trips compared to last year, but perhaps it gives you some keys you can work backwards to some figure you look for. Next question: is the second wave of coronavirus epidemic forcing you to consider to look at the bids received from for some of your vessels?
We haven't made any decision to sell any vessels. We, of course, getting proposals from different brokers, from different companies, but we haven't seen any reasonable offer to start discussions to sell any of our vessels.
Thank you. Next question: from your point of view, can your competitive positions on the Baltic Sea improve once this crisis is over?
Crisis gives also, of course, the potential positive outcome for the companies, and we'll see. We have worked hard to come out from this crisis stronger than we entered to this crisis.
Next question: are there discussions about raising further loans or additional cash through equity issues?
We will give this information through the stock exchange releases if we have some information about this issue.
Thank you. Has there been any discussion on core investors putting equity in the company in the worst case scenario, especially following the payout in 2019?
As I said, we will give all this information through the stock exchange releases, and there haven't been any such kinds discussions or decision made.
Thank you. We've now reached the end of the list of questions. We will give a couple more minutes to see if somebody has some last moment questions. But it appears that we have concluded all the questions that our listeners had for today. So thank you very much, everyone, for participating on the results webinar, and we look forward to hosting another webinar in 3 months' time.
Thank you very much. Good evening.
Thank you.